What up, what up, what up, what up, what up? Hope everybody's having a good night. We're going to get started in a little bit. Tonight, we are going to cover quarter points and going to go over fibs again. Start in 2 minutes. Start in 2 minutes.
What up?
Oh. All right. All right, so I will start tonight. I'm going to be going over quarter points and what the quarter point theory exactly is. I've mentioned it a couple of times in the group. However, I'm going to actually go over it tonight. That way you guys can get kind of a basic understanding. So people ask me, what is the quarter point theory? Maybe you've heard about it, like I said, maybe you know a little bit. But basically what it is it's a theory of 1,000 pip ranges where the market has respected, and it basically acts as another support and resistance. So how you do that, it's different. It's going to be different on every pair because of what the values show. So for the dollar, it's going to be, you're going to start at 0.000 for $1. And then you're just going to add 0.25 to it. So then it's going to go from 1.000 to 1.250. And then you're going to do another one. What's half of a dollar? 50. So it's 1.0500. 1.750. We're gonna, so that way you guys can see it. And these are 1,000 pip ranges too. So if you can't see them on my screen, that's why. It's because they are, like I said, 1,000 pip ranges. So the next one is going to be 2.00. And we go to the monthly time frames. You guys can Who is that? Can you please pause? Can you please mute your mic? Is that Chris? Is that you? Who is that? All right. Try it again. Sorry about that. So anyway, what I was saying was you divide it into quarters, so quarter points. So this is the monthly time frame, and once again, like I said, they just act as extra support and resistance lines, basically. And what typically will happen is they will range, because these are 250 pip ranges. So the whole numbers are going to be the majors, and the in between, the 250, the 500, and 750 are the minors. So this is a major quarter point, and this one is a major quarter point as well, because it's the next 1,000. So for example, the next one after that would be, the next major quarter point would be $3.003, 3.00. And the next minor would be 2.250, and then 2.50, 2.750, and then 3. Just adding it up as like a quarter basically. So let me go back down to like a smaller time frame. This typically what people use this for is more so swing traders. So people who will mark up charts on the like daily or weekly, and will use it. So for example, like this acted as, support. It broke it, did whatever, and then it found that area of resistance just under a minor quarter point, being 2.500, and then it dropped from there. And let's see when it went to the next quarter point. Let's see, USD CAD, found a good one on that one. One sec. All right, so I will do this one. We see, I always want to try to do it closer to where price is. So for this, it's every 10 are the majors. So this one, the closest one is going to be 3.00. Okay. The next 1,000 is going to be 4.00. Which is up here. But as you can see, perfectly bounced off this major quarter point, and now it looks like it's going to go continue up here, or it may find some type of some type of ceiling before that. and it may reject off of that ceiling in between, and then it may head down to the next quarter point. But let's 3, 2, 5. This is a minor quarter point. So what happened with this minor quarter point? It broke above, tested, and then shot up. And remember, this is on a daily time frame, so these are 250 pip ranges. Once again, acted as a ceiling, this minor quarter point, it went down to the next minor quarter point. And then 7, 5. So what's funny is USD CAD on the daily time frame, it's at a minor quarter point right now, being 3750, and it looks like it's rejecting it a little bit. So what I do is I wait. I will wait, and once I see some type of reversal bearish confirmation, I will sell, and my next take profit will be 3,500 because that's the next quarter point area. One sec, I'm gonna get my charger real quick. All right, so I don't want anyone to be using this as, their only confirmation. However, if you do see that prices slowly starting to kind of hang around an area, and when you do your markups, I always leave these on here. I think I have mine on there still for gold. Must be on my other chart. So basically, it's not that hard. When you zoom out to like the weekly, you can see how perfect it is. And you also use this with Fibonacci retracement, which I've talked about before. But remember, this is also the weekly time frame. So when I draw my fibs, I go from high to low, depending on which way the market is moving, or I go from low to high, depending on the overall direction of the trend. So what's crazy is when you incorporate, fibs with quarter points, you see kind of where the market reverses at. Make it exact. Okay. So 38.2 being a key level, which I've talked about before, 61.8, 88.6, 127, all those. I think I have a video on it you can watch as well. I'll go a little bit more in depth in a little bit. But I like to draw zones right below those key levels just to show potential areas of a trend reversal. So 38.2, 61.8. $88.6, and then let's see, my 127 should be there. So these are all the numbers that you enter to have a correct Fibonacci retracement setup like I do with mine. So I'm going to take this picture. I'm going to take a picture of this and I'm going to send it in the group right now. These are the exact numbers that you enter, and check those exact boxes when you do it. How you pull up this is you just draw a retracement tool, or you use your Fibonacci retracement, you double click it, and then it will pull up all of this, and copy it is exactly how you see it. Okay. So what I like to look for is when I see a break, I like to look for some type of retracement, and then I like to see it continue its trend. So like this most recent move, for example, it broke above, it retraced down to an 88.6 or a zone, and it continued up. So if you would have saw this and you would have gotten, let's say right here, you would be up around 173 pips right now, which on a 0.10 lot, that's $173. Or on a standard lot, that is about $1,700 to $1,800, just over about 3 days or so, just from being patient and waiting. So what I'm looking for next to happen with USD CAD is I am looking for it to either show me a bearish confirmation right here, show me a bearish confirmation for a sell to go back down, or I'm looking for it to break above, and I'm looking for it to test, break above, and then retest the quarter point. And I'm looking for it to continue up to the major quarter point, which is 1.4000. And then ideally, I would like to see some type of reversal up here and then see it come down. Or we could see reverse now and drop down. This could act as support and it could continue back up, or it could break below, retest, and then it could continue dropping. And remember, this is a daily time frame, so each one of these little candles represents one day. Okay, each candle represents one day, meaning this is a longer period, which means it requires more patience. I always tell people, I can't stress it enough: patience, 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 patience. That's how you're going to make the most money, is simply off of patience. So right here, perfect example. I will say that that this is a trend reversal pattern. I suggest everyone that's watching this studies trend reversal patterns. Very powerful. But this is a lot of what you'd see on the daily. You see it respecting. You'll see wicks like this. However, when you zoom in a little bit more, you'll see that there is some type of reversal pattern right below a quarter point. Or this is a minor quarter point, not a major, because major is the whole number. So major is a whole number like this, and these are minors. So you see a reverse under minor quarter point, you see it come up, failure to break a zone, which is probably some type of key fib level. This is probably a 38.2, and this is probably a 61.8 that it shot up and continued up on. Same story right here. It formed reversal pattern, broke up, came up, tested some type of probably key fib level as well as a zone, and it's been continuing up ever since. So yeah, this was an 88.6, that's right. And it's just been going up ever since. However, now on the 4 hour, we see that this has been tested. So maybe it might consolidate. However, with the high risk, or with the news that is going on tomorrow, we'll see a lot of movement too. How do you do period separators? What are some bearish confirmations? Period separators are when you go down to the period separators are on the 1 hour. You don't use period separators on the daily or the 4 hour. So how you get your period separators though on the 1 hour is you obviously go to your 1 hour time frame. All right, let's exit out of that. All right, so you will right click, you will go down to properties, you go to time zones and sessions, you click session breaks and you make them the whole line, and bam, you have your period separators. How you draw fibs is you draw it from the day prior. So I'll go over this again because some people have had some trouble still. So you go from the day prior. So for example, this is a new day because there's no period separator in front of it. So this is considered the day prior. So we'll find our Fibonacci retracement tool over here. There is a TradingView tutorial on my YouTube channel. But that is how you get the Fibonacci tool, and you'll draw it from the low to the high of this day because the market was trending up. And what do we see? We saw a retracement of a 50% level, nice little reversal pattern right here. And now we look like we're going to be on a continuation up because it closed above the 38.2, which is a key level. And we should be good for a continuation of the uptrend. And I would be watching to see what it does right here. This is an hour time frame. So let's see what it looks like on the daily chart. All right, no, it looks a little crazy. But what's crazy is remember how I zoomed in like down here and you saw that nice little reversal? It looked like a U sort of. What's crazy is that this -27 and -61.8 are key levels. So I would not be surprised if I saw some type of reversal pattern, whether it's a doji, a evening star, different bearish engulfing, things like that, that you can do research and study as well. But I would not be surprised to see a reversal off this strong fib level and then see it continue down. So let's go back down to the 1 hour. And to answer your question, bearish confirmations would be things such as a bearish engulfing, like I said, evening stars. These are things that you can look up, things you can do your own research on. I will say that learning the reversal patterns are very huge because let's say, let me find a good downtrend to where I saw a nice reversal up. Right here. All right, so we see it was going down, kind of did whatever, and then it went down. And then this is an example of a trend reversal right here. And it started on its way up. All right, this is a good example of these are two good bearish confirmations right here. You have a bearish engulfing. This is a bearish engulfing pattern right here. Basically what it is what it sounds like it is, a engulfing candle, basically eating the small one. So this is a bearish engulfing, good drop down, and then a nice doji right here, bearish doji, and another drop. Perfect bounce off of a zone, up again. This was prior. This was prior resistance. Perfect entry. This was not a quarter point. This was just a resistance. So this right here, you could have caught. I'm going to give you a total number of pips. Let's say you entered after the bullish engulfing because we always wait for the candle closes. You entered right here. All right, that is about 70 pips. So that's about $700 in about 12 hours that you would have made, about 700 bucks. And then if you got out or your stop profit got hit like right here, let's say you took you out at 50 pips. All right, and then you bought on these 3 pushes up, and you would have caught about 45 pips on that, which is about $450 with one standard lot. So now you would be up around $1,100 to $1,200 in 2 days. You entered on the doji, and remind you, this is aggressive trading, okay? It's very aggressive trading, but let's say you entered off the doji and you wrote it down to this zone. That's about 90 pips. So that's about $900 on a standard lot. So now you're up to about $2,000 in 3 days. And let's say you didn't trade it back up and you saw this was an area of resistance and you wrote it down to the minor quarter point, which is 3250. That's 164 pips, which is about $1,600 more dollars in a couple of days. So all in all, you would have made about 3,700 to $4,000 in about 5 days, which, I mean, I'm cool. I don't know about you guys, but I'm cool with $1,000 a day or $1,200 a day. I'm absolutely cool with that, off of just being patient. My charts are clean. Like, you can see, like, my charts are clean. And when you have clutter, that is when everything is out of whack. That's when you get confused. That's when you don't even know what you're looking at. And it's just frustrating, all in all, because if you don't have a clean chart, you're not going to have a clean mind, and everything is just going to be out of control. I'm going to go to EURUSD, and I'm going to mark up EURUSD for you guys. And this will be just a free little trade setup for the evening. That gap was insane. There's a lot of high risk news tomorrow, so I would not recommend people who are new to trading. I would not recommend you trade that whatsoever. I would not recommend that. So I'm going to start out by doing my major quarter points. So I'm going to start at the whole number, 1000. Actually, here, I'm going to clear. I don't know if I have other stuff drawn on here, but I'm going to clear everything. All right, so we're going to start out by doing our major quarter points. 1, the next major quarter point is going to be 2, and then after that, it would be 3. But let's do our minors. So next going to be 250. 500. And if anyone really wants to read the book, I can send you the audio. I can send you the digital copy of the book in the chat. Just message me and tell me if you want it, and then I'll send it to you guys. So right now I just did my minor quarter points. You can't see them, but I promise you they're on there. All right, so you guys can see them now. Cool. Major quarter point. So fibs from left to right, whether high to low or low to high. Yeah, exactly. So here, I will do an example of that on the, I'll do an example of that real quick. Wow, that just stretched that out a lot. Hold on. Okay. That's bad. All right, perfect. So high U fib is from the high to the low of the day or the low to the high. It can't be just however you want to do it. So let's say the market had been trending, for example, like it kind of consolidated today. So how you draw it is you go from this low left to right, and then you will go to the high of the day. All right. Or let's say this day hasn't happened yet. Let's say the rest of this hasn't happened yet, and it looks like this, but right here. So you would go from this day. As you can see, it trended up. So we're going to go from low to high. And look what happened. You could have caught this last night. A perfect bounce off a 61.8 fib, which is a key level. You would have waited for your entry. This was probably, what time was this at? 12, 2, 3, This is about 3 a.m., I want to say. So you would have caught this nice little reversal at 3 a.m. off of a nice long wick at a 61.8 fib. And you could have caught about 34 pips. So that's about $340 on a standard lot. So we're going to go back to, I'm going to find one where it trended low or high to low. All right, so perfect example from this one. So you see it trended down. So we're going to go from a little high and we're going to go to low. So perfect example of this. Look at all these rejections at this 61.8 fib. You could have got in on this long wick, and let's say you wanted to get in right here. That is about 65 pips. That's about $650 in 2 hours that you could have caught. And these are with 1.0 lots. So depending on your depending on your account size, depending on what kind of trader you are, it depends on basically your risk to reward. So I'm just going to mark off some support and resistance. Ignore that. So this is how I mark up my charts from scratch to how I get my analysis. And accuracy is very important when drawing your fibs. Okay. Seeing even this one. All right, perfect. So what's crazy is you see that on this negative 27 area lines up perfectly with my resistance that I had drawn before I even drew my fib levels. Okay. So as you can see, a nice little area of support, a little support over here, tested as resistance, drop. All right, easy enough, right? Support, resistance. Now it's trending up, so I'm gonna look for a negative 27 touch probably. If it does want to keep going up, I'll look for a little negative 27 touch, maybe a little wick there. And I'll look for it to go down to 38.2, which is a 38 or 38.2 Fibonacci level, which is a key level. If it happens to break this, I'm looking for a test of the 61.8 like it did a couple of nights ago. And let's say it just wants to be amazing and it wants to break that 61.8, then we're going to be looking at 88.6. And if it breaks the 88.6, we're looking at a 161.8, which is all the way down there. So with the high risk news that is tomorrow, it's very possible that it could get down all the way down there, which is about a 70 pip drop or so. And FOMC is pretty wild. So what might happen is what I'm thinking. FOMC is at 2 p.m. tomorrow. So what I'm thinking, if these levels hold true, I could see a stop hunt, which is basically, this is a stop hunt. Extremely long wick to take people out of their positions. So I'm looking for basically one of these all the way up here. I'm looking for it to close below here, and I'm looking for a nice drop down here. Or the opposite, or I'm looking for tonight, I'm looking for a push down here. And let's say NFP comes tomorrow, maybe a huge wick right there. It closes above 61.8, and we could be looking at a big push up. So those are a couple of things to watch for. I enter and exit off fibs. So I'm going to show you last night a perfect example. I sent it in the group earlier, but I'm going to show you a textbook example. And this is just raw price movement. All right, so this is the daily chart. Let's go down to the hourly. All right, so finding period separators, right click, properties, time zone sessions, session breaks on. Ooh, I don't like that. All right, so for a little while, we've been kind of in this area. So last night, I will show you what happened. Mind you, everything was right here. So I drew my fibs from high to low, right? Because it trended down yesterday. I entered after it broke here. I caught this all the way down. Here, I'll send a screenshot in the group again. 1 sec, I just need to find it. All right, just send it in the group. So what I did was I caught this drop down off the 38.2 perfect entry wick, enter. And then what happened? A reversal off of a negative 27. I would have totally got in that, but I actually fell asleep. And I woke up this morning. I was like, wow, I actually had taken profit. This was my take profit one because it was a negative 27. And had it broke this, I would have set my take profit to number 2, which is negative 61.8. So what happened? It reversed. It broke 38.2. It came down, tested 38.2 again, broke it, wicked a couple of times, tested 61.8, and it's been going up ever since. It's pretty easy. You just have to know what your key levels are, and you have to know how to correctly draw fibs. And like a perfect example like that, played out beautifully. And if you would have just waited and you could have entered off that negative 27, you'd be up 83 pips, which is $830 in one day. So pretty cool. It's obviously what the Forex market can do. I myself, I'm gonna sound that excited just because I try to take myself away from the money and not be emotionally connected with it. I try to just wait for price to react, and then I respond to what's going on. So tonight, I might be looking for price to come down, test 38.2, and continue up. Come down, test 61.8, continue up, or come up and test negative 27 and drop. So those are a couple scenarios, and I hope this webinar helped everybody out. And to re-go over quarter points real quick, it is every 1,000 pip range for whole numbers. So with this, it's 1.00. The next major quarter point would be 2.00. The next major quarter point would be 300, and you divide it into 4 sections in between each 1,000 pips. So 1 divided by 4 is 0.25. So then you do your ranges every 250 pips, and those are your minor quarter points. Those minor quarter points are still very strong. The whole numbers are where the banks like to move the money the most. So oftentimes you may see price come near a major quarter point and reverse. So actually right here, I still have this gold marked up. So this is a minor quarter point. Okay. This is a minor quarter point right here. And this is on the daily time frame, and gold is rejecting it. It actually is showing a doji candle, a reversal. So that's why my target is 1,300, because this is the next quarter point. So that is, let's see, it's about a 419 pip target with a 100 pip risk. It's where this is where risk management comes in. If you used 0.01 for every $100, you'd be risking $10 to make 40. If you had $1,000 in your account, you would be risking $100 to make $455 to be exact. This is what I'm looking for gold, just off of some simple quarter point reversals, some Fibonacci daily 61.8 reversal, a lot of confirmations to be looking towards a buy for gold for the long term. Because mind you, you could be in 100 pip drawdown, and chances are a lot of people, their accounts probably can't handle 100 pip drawdown. But we are looking for bigger targets. If you look overall, the trend is upwards. We did have a retest of a quarter point right here.